Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day yesterday as we are seeing a little bit of bullish action this morning in the S&P as we are up about 3.5% in pre-market trading, starting to see a little bit of momentum kind of flowing through. For those of you new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. As we are going through today, let's take a look at some of these levels, knowing that we're still in a downtrend, but getting a little bit of a pop. So what does that mean? Does it change our overall perspective? Well, we're seeing the hourly chart, nice little rollover effect. Yesterday, when we were in our live trade room, we were still looking bearishly. And the reason we were still looking bearishly is because the markets hadn't really given us a reason to get bullish. We got a little move away out of this tiny little breakdown on like the 15-minute. We were looking at it on the 15-minute time period. We got a little bit of a move away, but not enough. It just kind of popped up there right away. Not enough to really do anything. But that really kind of created a zone, if you will, where we retested and then rallied up in the overnight. So strong overnight moves in the S&P. When I go to the 4-hour chart, which is my big picture, we're seeing that prices are getting a little bit more momentum, a little bit up more to the upside. Now, part of the reason that I think that's doing that is, let me go to the Dow. I don't look at the Dow very often in the daily market commentary, but if I go to the Dow Jones, you'll see that we are, just sitting above monthly demand. So that monthly demand in the Dow is a pretty decent pop. Same thing in the NQ. We are pretty close to that monthly demand area that was right in through here, and we're getting a little bit of a bounce off of there. Have we retraced our drop? No. And I don't know that we definitely will. And so when I look at these markets on the S&P, I'm really still looking at where's my level of supply up above. Because you got to think, as we fell, we didn't really get any super clean supply levels on the way down. For me to be proven wrong, I'm going to need to get stopped out of some of these supply areas up above me. Now, insofar as today goes, we may see a bit of a rally up for short-term day trading opportunities. Looking at some of these areas in here, we do have some little areas of demand. All of these areas of demand still have to be confirmation entries because our big picture is still down, right? So while it's tempting to say, well, look, the market's up 3%, I can get long on a pullback, I'm still not willing to do that. I still want to wait for a confirmation entry. This being the cleanest of our demand areas right in here, where we could get a little bit of a bounce. Right through there, once again, knowing that there's that confirmation style entry is important. In the Nasdaq, very similar picture. The Nasdaq, we looked at this level yesterday as on a 15-minute chart, because I know it's in red. We got a nice little move away in the Nasdaq level off of our 15-minute zone, a little bit greater than a 1-to-1, and then price just rallied back up. And so now that level that we looked at as supply acted as demand in the overnight sessions. This is our fair price value areas working pretty hard. And we came to a limit up move inside of the Nasdaq. So the Nasdaq gave us that limit up move. Now, we did talk about yesterday a potential breakout in the Nasdaq above this region, provided that I get the basing. I did not get the basing. There was no basing to be had before we got our limit up position. And so now what I need to do is I need to look at where's the retest area lie. And I think that in this one, I got a really nice retest area right in here where you could have an opportunity. So if you're going to get long, I think the Nasdaq is your strongest market, the one that makes the most sense. Yesterday, I tweeted out a picture of the fact that our 4-hour momentum was giving us a bullish signal. We are getting a bullish signal. Now, do I think it's going to last long? Not really. When I look at this on a 4-hour time period, I think we'll get a bit of a rally up, but I've got some supply up above me that is worth looking at, and that might be worth leaning on. So keep an eye on some of these areas of supply that And it'll look like a great rally, right? I mean, people will say, "Oh, we're back to normal. The economy is going to be fine." And I don't necessarily know that I believe that. I think it just may be a short-term rally before then another drop lower. That's my overall feeling. Um, and I would love to be proven wrong. I think it would be great for many people around the world if I'm proven wrong, and I'm totally okay with that. Because that's why we trade with the trend direction, because you're trading with the trend until proven otherwise. All right, let's move over to crude oil. So in crude, another one where we're going with the trend until proven otherwise. We came up here and we hit our crude level. We got a little bit of a move away. We hit it again, So you can tell that crude just really popped all over the place. And then yesterday we got a really big rally up in crude throughout the day. And it gave us a little bit of strength. Now, we had talked about the fact that there was this kind of a shape and a pattern that had formed, and we did get the breakout from that pattern, which is normally a basing pattern, provided that I get to a bullish pattern, provided that I get basing in front of the level. Now we're basing in front of the breakout area right in here. This was a breakdown that we had taken earlier in the week. Now we're basing in front of a breakout to the upside potential. So keep an eye on this for a potential upside breakout. If that occurs, my guess is we'd probably go right through that little 15-minute level and allow price to kind of rally up. So, we bottomed out at $20 a barrel, and so we're now sitting here at around 28. Nice quick move up in crude. In gold, yesterday we talked about this particular area down in this region. We stayed above it most of the day. We popped just for a moment down there in the evening sessions. During the sessions, my guess is most people aren't looking at it at that time of the day. This level is still valid. I might go a bit lower at this point as we popped above it. But I do think that we need to be, I would just stay cautious on this one because we are putting in a bit of a base here in gold where I could see a little bit of a rally. So that 15-minute level up above me is a little bit more suspect, although it's formed at a pretty good time of day for gold. So if you do take this one, just look for a pretty quick reversal in that piece. Looking at bonds and currency markets. So in our bond markets, yesterday we had taken a look at it and talked about this little area here for a potential breakout, since we had this long wick down and then another move back up. We did get a bit of a breakout, moved for, after 1, 2, 3, 4, 5, after 6 candles, it had gone basically nowhere. Came back down, didn't get us to where our stop out point would be, because our stop out point's got to be somewhere down in here. We've gotten a little run from there. So that one's moving a little bit. You've got a reversal that's upcoming here, potential for a reversal right up in this region. We've got, if we base in front of this level, remember it's the kiss of death and we wouldn't want to take it at that point. I would say that it might be best just to hold off a little bit and wait if we get a reversal, if we base in front of that level. Next, the Aussie. So in our Aussie trade, we got a really nice trade in the Aussie. We were looking yesterday at a potential breakout above this region. The breakout didn't truly give me any good basing, but our reversal worked exceptionally well for a very nice move away. We've now hit it for the second time back in and are starting to come back down, so I need to delete this level. I will say this on the hourly chart, or even the 4-hour chart, it's a little bit of a V bottom that we kind of created here. And so I'm still going to keep my hourly level of supply up above us here, but I think there's a chance that we could see a long right in here, and this is the first reversal long I've talked about in the Aussie in a long time. So let's see if this one is able to hold today. In the euro, we've got our supply level up above us. Did not make it all the way up to that supply level. Still continuing our move down. Remember, this level where we got our bounce off of actually comes from a daily chart where we were coming off of the gap. We got to go back a little bit further. And so that really comes off of this daily chart back here where we have our gap built in. Looking at this area back in here. So that's where we're seeing a little bit of that bullish bounce, but it's, that upper wick tells me that it's unable to hold and we're not getting much from there. So now sliding back to the 1 hour time period, if we base in front of this level, we've got another opportunity for a breakdown, provided that we get basing in front of that level. Canadian dollar yesterday, big move up. Now, basing in front of the level, what does that mean? Everybody should know by now, kiss of death, right? So, and that happened in the overnight sessions. We did catch, this one has caught and started to move away. So if you did get in on this one, which you would have just gotten in the last, I don't know, probably 30 minutes or so, allow this thing to run, but you've got a really nice wick over wick level right down in here where I think you could see a reversal. So to me, give yourself the opportunity to take a small time frame day trade on a pullback into this region right in here. Last two markets, Great British Pound and Japanese Yen. The pound yesterday, we were looking at this area down in here as a potential zone. We got a little bit of basing there in front of the level, but we broke down once again. This is the time of day that is not a great time of the day. We look for breakouts to occur when markets are open, specifically around market open times. We did get a nice short trade off of our 15-minute chart off this little wick over wick. Price hit that level, got a really nice move away. Now we've rallied up a bit higher. As we come down, there's a couple of levels here where we could see a reversal. So all of our currencies, for the most part, have that reversal area that's building in there that hit around midnight last night. Japanese yen, our demand level, we had the basing here in front of the zone. We talked about it yesterday during the live trade room. The basing in front of the level means there's a chance for a breakdown. We broke down from there, hit our demand level, and then have rallied back up. Unfortunately, didn't make it all the way back up to our secondary supply. So now, looking at this, the opportunity, I think, is still for the supply area up in here. I don't know that I trust any of these demand areas down here, so they have to be confirmation entries. In most of these positions, I will say, it might be, if you've had a good week, it might be a good day to kind of sit back and allow the market to kind of settle off. We've seen the last couple of weeks that we've gotten a rally on Friday and then gapped down on Sunday. So you've got to make sure that you are hedged against gap risk over the weekend. Gap risk over the weekend is one of the things that become the most dangerous. And with announcements of California completely shutting down here in the last few hours, I'm really surprised that the market has responded as powerfully as it has. But we will see what happens over the weekend. If you have any questions, as always, please send us an email, support@tradersarmy.com. Thanks so much, everybody. I will talk to you soon. See ya.